Welcome back to the channel, and for today's video we got a big stock to talk about. Stock ticker DIS, the Walt Disney Company. Now this stock I know a lot of you are invested into. You may be down quite a bit of money too, because this thing has just been taking a hit ever since last summer. But the thing we want to talk about is this is a great long-term stock that right now may not look like a good idea to be buying in, but it actually is. Right now, this is potentially the big turning point we've been waiting for, and there's a couple reasons why. First things first, we're looking at the past couple years. Back in 2020, this thing obviously dropped with COVID, ran all the way up to $203. Now, a lot of people bought on the way up, so most people's average prices, I would say, are between this 120 area to about 170, 180. The stock then stabilized out for a little bit, and then towards the end of 22, the stock started to fall and then continued to fall through literally the whole entire year from 2022 all the way through to 2023 where we are now, and continued to fall throughout pretty much all of this year. Basically, the past 2 years has been just falling, free falling, if you will. But we are at the point right now where not only are we testing, well, we actually hit all-time lows at $78, okay? Back here in 2020, we hit around this area. So not only are we testing and hit all-time lows, we're stabling out in this area, which is concerning me in a good way, because now I'm interested to see what's going to happen. We almost did what some people in the trading world would call a double bottom, where we bottomed out here at 78, bounced back up, and then bottomed out again around this 78, 79 area. So a double bottom here creates another push off. Now, if we can create a jump through this, I would say, if I were to draw a line here, through this 87, 86 area of resistance, where we tapped it once before and twice, and now a third time we're looking to get close. If we can push through on this third time and break above this 180 SMA line, this is a huge turnaround. Now, the timing of this is also impeccable because of earnings, okay? Now, earnings are scheduled to be after hours on this Wednesday, the 8th, okay? That is going to be also a huge deal breaker as to whether or not the stock will continue to move up or continue to fall, okay? Obviously, the last quarter we reported actually did pretty well. They beat on earnings per share, $1.03 versus the 98 cents estimate. And the stock did pop from basically 85 up to what, 90, 92 area, but not very much before it just continued to fall back down. But now, after we hit a double bottom here at 78, and again here around 78, 79, bounced up, tried to break through resistance, bounced back down, and then did a double bottom, tried to continue to move back up. Now, if we can get a push through either in the next couple days before earnings or at earnings with a good earnings release, this thing, I believe, goes back above $100. If you take a look at this picture, I pulled up the 12-month outlook for the forecasting and price target, and you can see obviously the lower end is around that $70 range, which we're pretty much at right now. I mean, to get back down to $70 would be literally all-time lows, and it would be what, how much more downside? Maybe another 10%. But we have so much more upside based on this statistic because of the fact that the average price target would be $106, which would bring us up 35%. And then the highest price target around this $128 would bring us even further up to about 65%. So the amount of upside versus downside in this scenario, there's a lot more reward than there is risk. And you got to remember that's a huge thing to talk about when investing either long-term or short-term is your risk to reward ratio. In the short term, if you're looking to trade this thing, I think you jump at this thing now. I think that there is not much lower we can go versus how much higher we're expected to go. So earnings is really what we're going to be looking at for the big push. If you look at this chart, you can see earnings over the past couple of years, what the estimate was, what we actually reported. This quarter, we're looking at 71 cents for an earnings per share estimate, which is lower than the estimates last quarter. But if we blow it away with the actual reported earnings per share number, that is going to take this stock easily to $95, $100. I mean, this thing will pop if we report good earnings. This can be a tricky quarter because it was the transition of basically moving into the end of the quarter 3 and turning into quarter 4, which is a weird time of the year for Disney. Not many movies have released in the past couple months. Looking at parks and the revenue there, the kids are going back to school, so it could be an interesting quarter whether or not we move to the upside or downside. But either way, looking at this thing statistically here and looking at the chart, This is got a lot more reward ratio than it does risk. There's a lot more upside than there's downside. So what do I want you guys to do with this? Well, I want you to do a couple things. First things first, figure out what you're going for. Are you going long-term or short-term? If you're going short-term, this is a good entry right now to look into getting into, because of the fact that we're trading near this resistance. If we can get a pop through, we jump up to the 90s and potentially even 100 before earnings, okay? It's a little risky to get in before earnings and to kind of tempt the waters. I think that if you want to get in after earnings, it's also a good short-term play. See how the stock performs and then play the post run up. If this thing jumps to $95, $100 off of earnings, I think it runs to 105, 110 the day after type of thing. So the post reaction can sometimes be stronger than the actual reaction itself. Now for the long term, I think you start buying down here if you really want to go long term in Disney. It'll take a couple of years, and especially what analysts are saying, it'll take a little while for the stock to regain back to where we've seen it during basically COVID timeframe, when it was at $200. It'll take a little while to get back up to this point, but I really think that the stock itself, based on what it was doing prior to COVID, the numbers, it has the possibility to do the same. But it just depends on how long you're willing to sit in the stock and how long you're willing to wait to see whether or not the stock will perform as to what you expected it to do. So it's really all comes down to the timing here. If you're in the short term, I definitely think that there is opportunities for you to get in now. If you're in it for the long term, definitely, you know what, little by little, anytime there's a drop or anytime it takes a hit, get more shares into it and just keep on building up that portfolio with Disney stock. I think it's a good one. I think that earnings is definitely going to help this. I think that it's going to get pushed to the upside, but we're going to wait to see Wednesday after hours, Wednesday the 8th, see what happens with earnings. Let me know in the comments what you guys think about the stock Disney, whether you guys are going to do it long-term or short-term, or whether you're not getting it at all, or maybe you're waiting to see what happens after earnings. Personally, I am already in it long-term, but I'm going to look into playing a short-term play post-earnings. I want to see it jump above this resistance right here, and if it can jump above this resistance, then I think that we have the chance that after earnings, it jumps to $95, $100 potentially, and then boom, we just keep running from there a couple days after. But we'll have to see. It depends how earnings does, and really all depends on what numbers are reported that day after hours on Wednesday. So let me know in the comments what you guys think about this video. If you guys are new here, hit that subscribe button, like this video, and I will catch you guys in the next video. Peace out, everybody.